Hello, everyone. We're live. I'm here with Michael Velasco.
Hey, everybody.
We're getting ready to get started. He's going to share the link over to his page,
Yeah.
Provident Accounting.
Yep. Provident Accounting. I'm going to share this as well. Here we
go. So everyone, as you tune in, if you're watching on the live, if you have any questions, leave a comment so we can get to your questions. So Michael Velasco here. So this is we're keeping the streak alive of the streams, the live streams on Fridays. It's we're a little bit later. I better get some power. I better get my battery cord.
Thanks while Rilus is doing that. Happy to be here. So I've been watching some of your events on Friday, so these are really
You're
cool.
One of the four.
One of the four.
Appreciate you.
Myself, your mom, and your sister.
Yeah.
Hopefully we'll have a few more relatives in today.
We met on a live stream, right?
Yeah.
True story. That's how we know each other.
Pace Morby, who is a big Subject 2 guy, big wholesale real estate guy here in. Well, he's actually more national now, but got to know you a little bit on a podcast and been friends with you ever since. So it's good to kind of hang out with you.
Yeah, we should shout him out too. He's part of the reason this is happening. He kind of showed us the media, taught us, So we went live. It was you, Pace, I think Jamil.
Is Jamil or Jesse Burrell as well was there? Yeah.
I think the first time I went. I think when I met you, it was we've gone live a few times with them, right? A few times Pace. So it's been fun. So that's part of the reason for this show. So the idea behind this live pro network show is doing networking with professionals live and recording it so people can get the benefit of it.
Yep.
So whenever I get questions like, hey, do you know someone who does blank?
Yeah, exactly.
So today we're going to talk about Provident Accounting, where you're a partner, some of the solutions there. So the goal of this stream, we talked about how long, not Joe Rogan length yet, but 20 minutes or so. I just want people to get an idea of what you do and your industry.
Yep.
So they can learn about accounting and those types of things. And so there'll be a resource if they have any of those needs.
Yeah, absolutely. Yeah. So real excited to be here today and talk with you. And I know I've, kind of on the other side, since you trust business and will business, anybody that needs those types of services, I'm always sharing Rilus's information here. So
we appreciate it. I know you've sent a few people our direction. So really appreciate that. That's implement, I think, right? As far as a business. And I think you've helped some of my clients as well.
Absolutely.
So the reason or kind of the most common thing that I recommend you for is for LLCs.
Yeah.
Someone's looking for, LLCs and just accounting services.
Yeah.
We provide LLCs as well for our clients, but we only do them really as part of an estate planning package.
Right. Yeah, exactly.
If someone's wanting just an LLC, just that on their own, it's usually a better fit if they start off with yourself. You can usually offer that, cheaper than what we can. It's just more geared up to do that type of service.
And ours, where they get more complicated, we hand them over to an attorney where somebody's trying to protect their identity or their assets a little bit more. That's when, Rilus gets involved. But for the standard, small business owner that's getting their business going, that's where we come in and set up the articles of organization, the EIN number. If they're in a place where we think an S corporation, to designate an S corporation, we'll file the forms for that as well.
Yeah. So we were chatting as we were setting up, and I said, I want to know, what's the common stuff you're dealing with?
Yeah.
So and what was your answer?
That's probably it. Obviously, we have bookkeeping and tax preparation, which is kind of our wheelhouse and small business owners.
I guess so before we get into it, tell me more about Provident. Tell me more about the services there, and then I want to know what types of things that are the common things you're hearing about lately.
So our firm is located in Old Town Scottsdale, and we do the tax planning, we do the tax preparation, bookkeeping work, LLC set up. So most of our clients.
What type of people do you represent? Or
Well, that's a good
help?
question. I think most of our clients come to us are small business owners with gross revenues, under $15 million. And so that's kind of our wheelhouse, from construction companies to attorneys to real estate agents.
Do you have a minimum size?
We really don't. We have a lot of just single member LLCs, like real estate agents. Yeah.
And that's important to know, because a lot of people, or some accountants or some lawyers even, and sometimes it's too hard to, or people feel like they're not 15 million, they're not close to that $15 million marker. So
yeah, absolutely. We have clients that do $50,000 and need a great accountant, and we still help those. So until our firm gets big enough to where that's not an option, we still take new clients every single day. And I know a lot of accountants, stop taking new clients at some point. So
so that's a great expense for a small business, because you'll pay a lot more later.
You will. I think one of the challenges when we bring aboard a new client is really getting them in the systems that we have set up, and that's including getting your books lined out, make sure you're not commingling. We were talking about as one of the big problems in our industry, and not from a legal or illegal standpoint. We're not talking about that. I'm just talking about your average small business owner that's using their personal account for their business expense and vice versa. And for us to track that, how do we track that? If I don't have access to your personal accounts, how am I going to take that off your plate? So really at the end of the year, it becomes, a logistical nightmare trying it all in. And as a small business owner, your year's kicking off. Commingling.
Let's spend a second on that, and we'll get into it more. So people will set up, I see this a lot too. Yeah. People will set up an LLC.
Yep.
And then they don't put anything inside of it. Might be one issue.
Yeah.
Or maybe they put everything inside of it.
Mm-hmm.
So if they put nothing in it, that may be using their personal account for all the business expenses. Then they come to you with a shoebox at the end of the year and say, here you go.
Yeah. And obviously we don't want that to happen. But when we do take new clients on, that's a bit of the issue, right? Is they have this shoebox and they go, I really want great accounting and I want good bookkeeping.
And that's obviously going to affect their fee as well, right?
Yeah, exactly.
If they're coming like, latest,
here's 10 months of back expenses and revenue that we've got to account for, which creates issues but we're happy to, get it all cleaned up. It's actually quite satisfying to take a client that was doing it really, really horribly. And I was one of those 10 years ago. I was one of those guys.
It's hard to do everything. You're running the business. You're trying to figure out how to hook up a microphone, live broadcast, getting everything
the lighting.
done.
The lighting.
And so sometimes I think everyone knows they need to do it.
Yeah.
And sometimes it's maybe, they know they shouldn't commingle, but we'll sort it out next month. And then it probably snowballs.
Yeah, tomorrow, right? The most dangerous word we could ever say is tomorrow. We just kick the can down the road, and then, and then if it gets past a year, then the client typically will put their head in the sand and then maybe not file their taxes, which is even worse, right? Because it's such a big mountain to climb. And there's so much that they have to do that they just almost I don't want to.
Yeah, it's so overwhelmed.
Yeah, and I think that happens a lot in your with Wheels and Trusts. It's like, oh my gosh, it's so much, but they have all these assets and they're unprotected, or they just don't have a plan, and then God forbid somebody dies, and then we've got a mess on our hands. Yeah, so I think the same thing for us is we want to get it right, and we really want to help people get it right.
Yeah. So people, if you have a business entity, make sure help your accountants out.
Yeah.
And that's so when you set up business entities for people, when you set up an LLC, are you coaching them on that issue right away?
Yeah, absolutely. Yeah. It's one of the best practices we put in are, okay, we're setting up an LLC. Here's your EIN number. Let's get a business bank account set up. And we're going to use this, we're going to tie this business account to their QuickBooks profile. And, from that day on, business expenses go through the business, and from your standpoint, from an attorney standpoint, you don't want to mix those funds all into one thing. So it possibly limits your liability, your ability to protect your liability by, commingling all those funds together. Then a judge or an attorney may say, well, wait a second, this is just one big account. This isn't really separate, right?
Right. So if you're not following the rules, if you're creating everything different.
Yeah.
But you have a nice binder that says LLC on it.
Yeah.
But none of your leases pay to the LLC. You don't get any protection out of it.
Yeah. Yeah. Absolutely. And I think one thing that I was told last week by a lender friend of mine. I have a background in real estate as well. A lender friend told me, if you're making business car payment through the LLC, if it's a true car payment that's from the business, that won't get counted towards your debt to income ratio, which is something I never knew. So we really want to focus that LLC on all the business expenses so that you could really, really write off all those expenses. And so it's just one of the challenges in our business, and we see it every day. And it's really something I can preach for the rest of my life that will never ever go out of style, running a business effectively and correctly.
Yeah, good. So I'm glad we touched on that today.
Yeah.
That's one of the most common things.
One of the most common things. Yeah.
Okay. And then what else do you help with? We were talking about the PLLCs a little bit. You want to explain?
Actually,
that little niche.
Yeah, so some of the state regulators, like attorneys, the bar, perhaps, or the Arizona Department of Real Estate, they'll dictate how we can set up our liability companies. And for real estate agents and attorneys, there's specific ways, and those are called professional limited liability companies, which are regulated by usually another state entity.
Now, are realtors, is this true? Are they required to do a PLLC, or do they have to have some sort of special LLC?
Well, that is another great question. So if they're going to get paid into their LLC, it has to be a PLLC. So the Arizona Department of Real Estate has said, you're not allowed, Mr. Broker, who is the brokerage, you're not allowed to cut a check to an LLC. You're allowed to cut a check to a PLLC. And so ADRE, they have very specific instructions. And even in the articles of organization that we create for these PLLCs, they have to have certain language in them. And they can only be used as a licensed real estate agent for those commissions.
Yeah. Yeah, I didn't realize, it might have been on one of those older live streams where I didn't realize that realtors had to do that.
Yeah, if they want to get paid, they can't get paid until the personal name. But then again, that's some protection.
They're not utilizing the LLC, really.
Yeah. Yeah, exactly. And then if they're doing any significant volume of commission, we want to set them up as a tax as an S corporation, which you cannot do unless you have the PLLC set up. So there's some layers of importance that we've got to kind of address with our clients, and again, we just set them up correctly. From the get-go.
Let's touch on S corps now. You said that was another topic that comes up a lot, right? You said that's something that you're always.
I'm gonna get a T-shirt made or a hat made that says "Got S corp," because all of our clients seem to. Well, it's interesting when we bring clients aboard. A lot of times they don't know what their entity is. They're like, "I think I have an S corp." I'm just like, "Well, you probably have an LLC. Do you have an LLC?" Yes. But the S corp is a tax designation. It's not an entity. You can't go to the Arizona Corporation Commission and set up a S corp. You have to set up an LLC.
Can you go to LegalZoom and set up an S corp?
No, you can't do that. Well, you could set up an LLC and then tax as a.
So the thing is,
that's a good point.
There's no such thing as it, right? It's either an LLC or a corporation.
Right.
So an S corp is a tax treatment.
Yeah, exactly.
It's a type of tax treatment.
Yeah, exactly. Yeah, so we're electing to be taxed as an S corporation.
This is nerdy stuff that I love, because a lot of people with LLCs, a lot of people don't realize that you can tax them like a corporation.
You can, yeah. You can elect however you want to be taxed as.
I think the default's like a partnership. Is that true?
Well, if there's two members, it would be, But they'll want to kind of shove you into a sole proprietor role if it's just a single member. But in most people, that's kind of what they don't even know they're doing it. But really, you want to be a disregarded entity and then file the form 2553 to be for the S corp election. And then at that point, set up a salary, and then you really start using the S corporation. And the idea behind the S corporation, the IRS has given us that as a way to circumvent some of the self-employment taxes that happen. And so you'll only pay self-employment tax on the first, the salary, whatever that may be designated. And then the rest of it we take as a distribution and pay regular income tax. So if that makes sense.
Yeah. So let's see if I can restate it.
Yeah.
So I think I understand these, but just to break it down. But so the benefit of an S corp it can reduce taxes. Basically,
Yeah.
it's
Self-employed.
first it's a tax treatment. There's no such thing as
Correct.
an actual
Yes,
S corp.
exactly.
It's either an LLC or a corporation.
Correct.
Nowadays, how often do you do corporations?
It's rare. If you're going public or you have a lot of investors, a large corporation, that would be the way to go. But they're a bit of a dinosaur. C corps are a bit of a dinosaur.
That's what I want to say. Yeah, you don't see them as often anymore. Corporations. So when people talk S corps, they actually probably mean an LLC.
Correct. Yeah.
It's allowed to be taxed like a corporation.
Yeah.
And then done the S election is how I refer to it. You named the actual numbers, but
yeah, exactly.
The S election. We want to qualify this way. And then if you qualify, so if you have just an LLC, all the income coming out is taxed at a certain way, basically. Is that
exactly?
It's all self-employment.
Yeah, self-employed. So your salary will be taxed like it normally would with a W-2 employee. Self-employment tax, state and federal tax, and then anything above the salary, the reasonable salary that the IRS designates, or what they're asking us to do is give a reasonable salary based on your profession, right? And so we'll sit down with the business owner and go, for your profession, like an attorney is going to be a higher salary than maybe a real estate agent or
so that's a great value you're providing in determining what that is.
Yeah, exactly.
And saying, so when I represent trustees of a trust, when they're a good way to shift liability is you get someone else, to give you an opinion, what is a fair and accurate number. So
well, and you don't want, at the end of the day, when you file your K-1s for salary and you do your personal return, you don't want any type of red flags. I mean, you don't want to give yourself a $10,000 salary and then the IRS goes, this is baloney. You're just trying to
and you probably have clients that want to push it, or they
here's the one thing about taxation. It's in an accounting firm is there's always people that hate paying taxes. So the other thing we do is we really will, put them on the right path too, and go, hey, there are certain things, certain guidelines we have to go by, and those are the ones we go by. And I think clients really appreciate that. They go, well, I'd really like to do this. And I go, unfortunately, you can't. We would love to if the tax code allowed us to. We keep them on the straight and narrow, and it keeps them out of trouble too.
That's good. That's why they're hiring you. Do you give them a range sometimes though, or like it should be here, but if you want to kind of push it
usually
here.
it's pretty cut and dry as far as where we think it should be. That's the number we give them, and rarely do we get pushback from clients where they're like, I don't like that salary. They're listening to you for advice, and we're trying to give them the best advice to keep them keep the file being audited.
So I started reading this book. I can't remember the author. I think it's Road Less Stupid or something like that.
I've not read that.
Brent Daniels recommended it. It's Keith something, I want to say, the author.
Road Less Traveled.
It's like the Road Less Dumb or something like that.
The road less dumb. I'm sorry. Okay.
But he talks about the idiot tax. Basically, when you do something, you pay an idiot tax.
Yeah. And I got a PhD in what not to do.
And then that's that tax is if you learn, like I think the S corp and accounting is a good example of that.
Great example.
People come to you, they come to your firm, and you're able to actually save the money.
Yeah, I mean, our average $100,000 in net profit small business owner saves about $10,000 in taxes just by, So people go, oh well, they're asking what their fees are, and I said, you can't afford not to get good advice from an attorney or a tax professional. It's something you need to invest in as a small business owner, where you start trying to cut. Hey, I don't want to do my contracts. I'm just going to go to LegalZoom, or I'm just going to do my own LLC. Years later, those things come back to really haunt you.
Yeah, because I want to say that after tax number is what's important. Like you may make a lot of money, but if you're paying a lot of taxes, your net is that's what affects you.
Yeah.
So
yeah.
Okay. So what should people watch out for? I like to talk about like what differentiates Provident accounting. Like, what are some of the bad accountants, or what's
well, that comes up a lot, I think, and we see it a lot when we get these new clients in, and we're dissecting how their entity was made, whether they should have been an S corporation, or they should have been a partnership, or should have been a C corporation. I've got a client right now that set up a C corporation with a fancy firm in Vegas.
So bad ones can be wrong entity is what you're saying.
The wrong entities.
Wrong entity.
So accounting firms and some law offices just like to shove clients in, make their money, and then hit them up for more filing fees perhaps. So this particular client paid the firm a couple $1,000, set up a C corporation for him. It's just him. He had no business. Now he's facing double taxation with the C corporation on the profitability for him and the profitability for his business. And paid him $2,000 where, and I'm not saying paying an attorney a couple $1,000 to do good work is not a problem but in this case it was just totally
like
unnecessary.
They were in different worlds, huh?
Yeah,
where he was at and what he needed, versus what he got.
Yeah. So I think the thing to watch out for is get a second opinion before you do anything in regards to setting up entities. And in this case, it could have been a simple LLC taxed as an S corporation. And for the revenue he's making, it would have been just fine. And now he goes, well, what do I do? And it's probably best to dissolve it. Now we got to dissolve it, which there's cost there. And so
sometimes that can be harder than creating, right?
Yeah, like exactly.
Corporation.
So I think I think that's one of them is just go with a firm or get a second opinion sometimes, either for your law work, your legal work, and also for your accounting. You should be looking at, hey, does this sound right for me?
Yeah. And then the legal and they should be collaborating. The accountants and attorneys should be
that's what we
together.
Do, right? With the client is, hey, we've got these things we got to take care of. Hey, Michael, what's the best route this way? And then if somebody dies, is there going to be taxation and those types of things, which you're obviously an expert at. So.
Yeah, because this, like going back to your example, that C corp is great for a lot of things. So if you go back to that firm and say this is crap, like what do you mean? You can do this and that, and they'll tell you all the different ways. Yeah. But if there's different objectives.
Yeah, and sometimes objectives are kind of self-fulfilling, meaning that the goal of the firm is to make a lot of money off of these setting these entities up. Where we're in more of the long game is I'd rather set you up correctly, save you some money. You're going to refer me a bunch of people down the road because I did it correctly, and I'm going to keep you as a client over the years.
Yeah, I feel like I call the latter approach the old school approach. Like in legal, like I see some of these older attorneys where they I would say purposely make things complicated.
Yeah.
Where they're making it hard because they want to ensure that they're needed.
Yeah. I'm sure that happens in your industry a lot.
But I feel like people are, the world's changing and they want better. They're like, they want to understand things. They're not going to go for this is just the way it is. It's hard.
Yes. Yeah.
Smart, not.
Right. So, and the consumer is so educated just by means of the information's at their fingertips. So a lot of times before they ever call you is, hey, this is what I'm thinking I'm needing. And then you'll answer the question, yes, that's true. But here are some of the things, because I'm the professional, some of the things you need to watch out for. Yes, you're on the right track, but here's how we should do it. And I think that's the advice. That's where we come in as professionals and really enhance maybe what they kind of knew a little bit about, and we open up the entire knowledge piece.
Here's what I see sometimes, and let me know if you see this in the accounting. Because of that information is freely available, I think it's mostly great. But sometimes you have people that they're way deeper than what they need.
Yes, absolutely.
Where they, I had someone the other day. It was a consultation just about a power of attorney, but she asked about like a more complex trust.
Right.
And I was like, before we get to that, there's like 8 other questions we're going to talk about, to see if you would even need that strategy.
Yeah.
But she was wanting can I do this, yes or no type of a thing,
Right.
And it's like, well, it's not that simple. It's not just.
And I'm sure you deal with a lot of cases where, there are varying degrees of, one, somebody's really well planned. 2, the person that's got somebody sick and they're, oh my gosh, we've waited. And then we've got all the way to somebody's just died and we have a huge problem and we don't know how to. I imagine all those things that you come
all
across.
of those.
Yeah, the different layers of or levels of.
Yeah, and I would say so. You have the well planned. I'll put this one category earlier. Too well planned. What I'm saying is they're reading ahead in the book.
Mm-hmm.
Higher than what they need to go.
Right. Yeah.
So do you get that in the accounting sometimes, where people want maybe a more complex strategy than?
Well, I think we get a lot of people that are maybe just starting to make a good amount of money, and they're looking for some magic wand that we can zap their tax returns with and make all the taxes go away. Yeah, and in reality, I mean, there's some great strategies to save money on taxes, and we go over all of those, which are really important. And then we start going, okay, now that you're making money, let's start putting some investments in that are going to shelter you, that passive tax or investment tax that can really save you a lot of money down the road. So
yeah, it's all about the after tax.
Yeah,
kind of like the big controversy. I would say, like the President Trump said he only paid $750, but it's. He was following the laws, and I'm not going to get too political now, but it's like if you use the system, it is possible to decrease what you pay.
Yeah, and I think the tax code is 75,000 pages, if I'm not mistaken.
Yeah.
So, and that's not all of it is most of it is on how to save you taxes, not on how to pay taxes. So,
right.
So, and remember who wrote this tax code, right? It was senators and they're all guys that usually make good money. So, so it's interesting how the tax code is written, and our job is to just use that as a tool to try to legally save you as much money as possible with taxes.
Yeah, one of my favorite quotes: Judge Learned Hand was an appellate court justice, considered a legal scholar, never a Supreme Court, but his opinions shaped a lot of law. I remember reading a lot of cases. L. Hand, his name was Learned.
So, is that right? Okay.
But anyways, he said there's two tax systems, one for the informed and one for the uninformed.
Absolutely.
I recommend the latter.
Yeah, exactly.
So, but it's always kind of been that way. It's not, they commit, it's not a straight tax. So yeah, there's so many variables to it.
So many variables. And that's the word we use. And I think you probably use this word a lot. It depends, right?
Yeah.
So somebody comes to us and goes, well, this blanket statement or question, and we're like, well, it depends. There's a lot of factors. What is your other income sources? What is your adjusted gross income going to be? Because that changes everything. It's at a variable tax rate, right? And there's a lot of variables that happen with your income level. And so maybe you're not paying, like we were just talking a little bit about long-term capital gains. Well, there is no long-term capital gains if you make under $80,000 as a married couple. So, but somebody that's making $300,000, it's going to be 15%.
So people under 80,000,
no long-term capital gains tax.
So what does that mean? So if they sell things and it's less than 80, then there's no.
Well, if their income is less than
total income
is less
including
than
whatever that
including
that gain.
So my point is it changes for people.
Yeah, always
it's
different.
hard for us to just go, oh, this is just the way it is without knowing the whole story.
Yeah, and taxes like capital gains has gotten harder, right? Because there's more rates and this and that.
A lot of variables. Yeah, long term, short term, and we were talking a little bit about the primary residence exemption, where you get $250,000 if you're single, $500,000 if you're married. You get that just basically tax free gain, which is in today's real estate market. And what's happened in the Valley with appreciation over the last 10 years, I mean, there are probably some people that are going to actually come close to that $250,000, $500,000 in gain, which is a great tax incentive. And it's what's kind of fueling our real estate market, which is on fire right now. So
yeah. So where do you see your business in the future, like 10 years down the road? Like, technology is affecting a lot of things. Like, the legal industry, I'm seeing it, affected and changing. Have you seen that in accounting, and what do you think it looks like in 10 years?
The old way of accounting was, you had the local tax person in your neighborhood, and you would take all of your files and drive to the office and give everything over to the tax professional. of your choosing.
That was kind of like the shoebox example that I used earlier.
Yeah.
Now it's not really a shoebox. It's probably like it's files. They're all digital.
They're all digital. Yeah. And so we have a great CRM. It's called Carbon. It's a made for accountants, and it's a great way for us to communicate with the clients in a secure way, meaning you can upload documents, and then we can store documents for future years, and it's all cloud-based and it's super secure. But we've got clients from New York to Seattle to Florida. I just set up a few LLCs in Florida this last week. So we're all over the country now, and we're able to do that because of technology. Like we couldn't, that wouldn't even be foreseeable, right? 10, 20 years ago, that couldn't have been something that we could have done. But now it's become, so if I looked 10 years down the road our company is going to be pretty much national, and, we got to obviously continue to staff and be really good at the process and the way we bring aboard clients and make sure that we're doing everything we can to take great care of them and at a high level of customer service, despite the volume. So it's interesting that you could actually be, a national company now where that couldn't have been possible 20 years ago. So
yeah, that's cool. That's good insights. And technology, I feel like this year in particular is kind of like a fast forward, getting people to realize everything that we already have and how we could use it.
Well, how many meetings are you doing on Zoom right now? Is it pretty much everything that you're doing on Zoom?
Yeah, pretty much everything. So people come into our office, into just the Mesa office is where we're doing the signings right now.
Yeah.
But that's the only in-person meeting.
Yeah, exactly.
And then we do everything else via Zoom.
Mm-hmm.
First I was kind of worried, that you lose some of that connection.
Yeah, me too.
Some of those ways. Part of the reason I'm doing this broadcast this way, the show is I think you can connect via video.
Yeah.
And if you are my client meetings, I just had to prepare more. I had to have some visuals, to help explain things. Because in person I was relying on, drawing pictures and doing things that way.
Which I like as well. I'm a kind of, I need a whiteboard, and I need to really kind of break down how it goes. I'm sure those are effective for you, but you've got to use probably something else, like some sort of PowerPoint or something.
Yeah. So now I use like a PowerPoint that I share and things like that.
Yeah.
And having my materials, like having a screen share is everything.
Yeah.
Because what we used to share all the documents, now we can share on the screen.
Yeah, absolutely.
And I would say the virtual meetings are more effective because if we need to make changes, we're we don't have to. Before we were looking at the paper documents together, and if there was a change, then you'd have to go back and reprint.
Yeah.
When I tell how it was when I got into the estate planning world, they would print like 3 draft, sometimes even like 5 draft copies. One for the paralegal and the 2 different attorneys, and then they would mark them up and send them back, and then another 5 more copies go out.
Yeah,
but
it's a lot of Xerox copies.
Yeah, so
a lot of Xerox copies.
So just like we got rid of a lot of paper that we use,
which we're almost paperless at this point.
Yeah, it's interesting you mentioned the ability to expand. Because that way, if you're zooming, if you're doing video, it doesn't matter where you're at.
Doesn't matter. It seems like we're hyper speed in the value of our time. Like we're going at this hyper speed of time is becoming such a factor, where with efficiencies, like you could do 20 Zoom meetings where you could only do 3 in-person meetings before. You're 3 times more efficient in your business probably because of it. And we're the same way. We're able to, and some of our clients want to do in-person meetings when their tax returns are done, and others of them are like, send me the secure copy, let me look at it. If it looks good, let's go ahead and file them. Honestly, there are clients I've never met in person.
Yeah, they want that information. You're helping them sort out, that.
And the convenience too, right?
Yeah.
They don't want to have to drive to, wherever to sign something. Now with electronic signatures. Yeah.
Yeah. So we used to, I was trying to offer video meetings, last year as well.
Yeah.
And it was like a fight with my receptionist. Like they didn't even want to mention it.
Right.
Because but I was like, I want you to at least just give it as an offer. If they want to, we have it.
Yeah.
And it was, very few people that would, want to do it.
Yeah.
one like, you can do video. Yeah, let's do
Let's
that.
just do that real quick. Yeah, I have to leave the house.
Yeah. So
leave the house. Yeah, awesome.
okay. So other question I like to ask. Again, this can be our last question. You want to do final thoughts for my last question?
Yeah, let's do it.
Last question I like to ask. I stole this from Raphael, CEO of Pulse. I don't know if you watch his show.
I don't, but I'm going to start.
But he asked, what would you do? It's a time machine question. You ran into your 18-year-old self.
Yes.
Back to the Future style. What would you say to yourself? What advice would you give?
When I was 18?
Yeah.
I think the most important thing, depending on whether it's going to be personally or what your profession is, but I think being very, very wise with debt, I think, is the most important thing, is to not put yourself in a situation where you're forced to do a job that you don't want to do because you have a car payment, you have a student loan debt, et cetera, et cetera. I think that for young people is the most important thing. And then really, when you're in your 20s, you're going to have to do some jobs you don't love. But once you start to develop a profession, you're not going to, when you get to our age, you're not going to, even past 30, 35, you're not going to do a job that you don't love. So make sure that whatever that you're doing, life is way too short. Do absolutely what you love to do. And I've been lucky enough in my professions that I'm doing exactly what I love to do. So it's, that's the biggest thing. And, and my daughter's 23, she'll be 24. And that was one of the most important things I taught her, is like, live a debt-free life if you can. And obviously, having a mortgage is one thing, but those extra things are not necessary. And then you'll have freedom. If you don't change jobs, right? And so that's what I would tell my 18-year-old self. Yeah. But I've got a PhD. Don't get me wrong. I've got a PhD in what not to do. And so I'm well educated.
That's why
the dumb tax, is that what it is? Yeah. I paid that.
Yeah. So like I said, once you're around 35, you're not going to do something that you don't love.
You will not.
You don't like. That is a great point.
You do when you're in your 20s because you have to, but once you get to a level where, and those are your prime money making years, right? 30, 35 to 55 is when you're going to make the most money in your life. And so it should be spent something you enjoy, and you're probably really good at what you're doing.
That's a nice. I think it's like Gary Vaynerchuk. He talks about that. It's a great coincidence. What you love the most is what you're the best at.
Yeah, and if you have to do a job for $20,000 less a year, and you're happy doing it, maybe that's what you should do. And if you don't have a lot of debt, you can do it, right? And you can still have a great quality of life. So
I think some of these changes we're seeing in society, I think some of those stigmas may be going away. People. I think one of the reasons people get into debt, there's many reasons, but one of them is probably they feel like they should, right? It's just kind of what you do.
That's what you do. Yeah, you got 2 cars, a house, you got this, you got trips, you got everybody's got to go to the nicest restaurant. So I think there's a pressure to do that, but I think there's obviously, and I think you're right. There's this enlightening happening with this generation where I think people are in tune to it, are really, really in tune to it. So hopefully we can continue to get better at that.
Yeah. Once people started working from home, realizing, hey, I hated that commute. I don't have to do that.
Right.
It's like, what other things can I get rid of that I was doing so long that I hated?
Or vice versa. I really love my office and I value it. Right. And I like being there. And so there's this.
And that too.
Yeah.
And so, and then you kind of go that way.
Yeah. Yeah. So I guess that's my final thought. And
Well, thanks for joining. This was fun.
It was awesome. Yeah, this is such a great conversation.
So how can people find you or find out more about you?
Well, you can follow us on Instagram. If you have an Instagram, Provident_accounting. That's a great way. ProvidentAccountingServices.com. Got our website. The Instagram and Facebook pages are great because I give weekly videos with tax tips. It's a great way to stay in touch with us, get a lot of great practical tax tips.
I've enjoyed your content. I've watched a lot of your videos, and
they're like 90 seconds long, so everybody has time to do it, and they're wildly popular. When I first started doing them to now, they just a lot of people are really interact. So I constantly challenge myself each week to make sure we put out really good content that people are going to actually want to watch.
So it's interesting. So I have, so we're live a bunch of places. One of the places is the Mott Legal YouTube. So any people watching there, if you go back to some of my older videos, they're pretty crappy, like Yellow Pad,
Yes.
but they have the most views because maybe there's just not other videos.
Well,
I won,
time, right? And as time goes on, more people search and watch. It's just the way it is. Yeah.
Yeah, but if you can give, I like your 90-second. If you can give quick,
Yeah.
Good information, but just in a brief way.
Yeah, that's our attention span, right?
Yeah, and if you need to, you can rewind it and pause. And
well, I think a lot of the content that you'll produce is very niche too. There's there's people that are where everybody has to do their taxes, right? And everybody should be doing their estate planning. But there's probably a smaller, and they're forced to, and they're not forced to do an estate, right? But they're forced to do their taxes legally. And so I imagine there's, those people that are watching are really in tune or very, very.
Yeah, they probably have the question is what led them there.
Yeah, exactly. So,
well, thanks for coming by, and thanks everyone for joining.
Thank you guys. Thanks for watching.
On the replay, we'll tell us how the future is. Let us know who else you'd like to see on the show. What are the topics you'd like us to cover?
Yeah. See you guys.